How does asset inflation affect your cost of living? Imagine watching the prices of things you own or want to buy keep climbing without you noticing. That's what happens when asset prices go up, and it can change how much money you need to live comfortably. Asset inflation is when the prices of assets like real estate, stocks, bonds, or even luxury items like art or jewelry increase over time. This usually happens when central banks lower interest rates, making it cheaper to borrow money. Investors then buy more assets because saving in traditional ways becomes less attractive, pushing asset prices higher. When real estate prices rise sharply, it affects your biggest expense, housing. If home prices go up, so do mortgage payments if you're buying, or rent if you're renting. For example, if a house that used to cost $100,000 now costs $150,000, your mortgage payments will be higher. This means more money out of your pocket each month just to keep a roof over your head. Asset inflation can also ripple into other costs. When property values increase, the costs for utilities, maintenance, and home repairs tend to go up too. Contractors might charge more because the value of the property has increased, and that gets passed on to you. Even if you don't own property, higher housing costs can make everything more expensive because people have less disposable income for other goods and services. While asset inflation is different from everyday consumer inflation, they are connected. When real estate prices rise, it raises the wealth of homeowners, who might then spend more. That increased spending can push prices higher across the economy. For instance, if a homeowner's house value jumps by 20%, they might feel richer and decide to buy a new car or go on vacation, which can increase demand and prices in those markets. Asset inflation also influences borrowing. When asset values go up, banks see loans secured by those assets as safer. They might lend more money, making it easier for people to borrow. But more borrowing can lead to higher demand for goods and services, which can push prices up overall. So, in simple terms, when asset prices increase, especially in housing, your living costs tend to go up too. It's not just about what you see in the grocery store, but how much it costs to own or rent your home and how much you can borrow. Understanding asset inflation helps you see how broader economic changes can affect your daily expenses and overall cost of living.